bottom low that you're talking about, once we hit that point there, is it going to get bad enough in the market with the pain that they're going to switch over to central bank digital currencies and put some people on universal basic income? I mean, is that too outlandish to ask as a question? I know it fits in sort of the same road space there, but didn't know if you had any thought on that.
No, I don't think it's going to happen this
cycle,
political cycle, because people are so fed up with government solutions to things to do that. Look, I can make the argument for central bank digital currency. I'm not going to give them to those guys, but I can make the case for it tomorrow. You know, if you had God, who's ultimately benevolent, running it, then it would be the most awesome thing in the world. But we don't have God. We have people that are at the other end of the faith spectrum, you know, running these things, and they're going to use it for their own petty advantages. And so I think people understand that now. They don't want these people to have anywhere near that kind of control over their lives.
And good afternoon, everyone. David Dubine here with Bob Kudla, TradeLikeAGenius.com. Everywhere you look across the planet, you can see signals marching forward that something's not exactly going to stay the way it was for the last 70 years in terms of the economy, markets, commodities. So where do we go from here through possibly the month of shock of October? Because, you know, through history, October is the month just generally that has the most surprises in it. Moving forward, today's market drop. What do we talk about with moving over to either indices, shorting them, commodities, which look like it's going to head north because a lot of things in Europe, as I was looking today, the nitrogen facilities are shutting down. And a lot of ammonia is not being produced along with the different smelters that have shut. So to give a wider scape view here, so you got to look at these different ways to move through what we're about to experience. There are going to be contractions, and across Europe there are. But then look at the Southern Hemisphere, also in the ag space, with the Tonga eruption really starting to dent in and really extend the winter down there. Like everywhere you look, it's either natural, it's economic man-made, but the contractions are everywhere. What's a big ticket item that you might need to get through this time? And with the supply chains breaking down, everything's gone up in price. It's not good. Everything's much more expensive. So, you know, commodities, Bob, like gold and silver, you talked before here. That's a simple one for people to, you know, looking at solutions, gold and silver. But on the trading side, you know, having a physical commodity versus being able to, you know, look to see, wow, is it really moving this way, or should I jump there? Should I sell? Should I not? You know, you're talking about the probabilities, but also having, you know, algorithms to help you see into the future a little bit more cleanly on when you should take a signal and move on that.
The way we do business is that, you know, we look at probabilities first, right? So just like you do on the climate side, is we look at the seasonality, and you know, we look at it by year, by month, you know, by week, by day. We have probabilities for all those things, number one. And then number two, we look at known events, right? The known events are the employment report, the known events are the Fed meeting, and that applies some different nuances to the logic. But once we have those things understood, then we look at what the Fed is doing. Are they adding liquidity or reducing liquidity? We have an algorithm for that. And then we look at what the derivatives are doing. Are they leaning for, you know, risk on or risk off? And we have an algorithm for that. And so we kind of know where we are from a macro standpoint. When I mean macro standpoint is, I'm like, what should we be thinking? Where we should be leaning today? Okay, we have it down to that point. And then once we know that, then we simply unleash our trading algorithms to say, are the levels supportive? Like buy the dip mode, or they sell the rip mode, and then our other algorithm simply looks at levels to buy. And then so what we've recently done is, normally I curate those myself, and I call out one or two a day that I like, and I'm still going to do that. But I'm also going to, and I have opened up our watch list and our bot to actually signal out those stocks that are hitting our criteria, so that people can curate those also on their own. If it's something, you know, if I get 6 of them a day, I'm only really calling out 2 a day, but there's 4 more out there that you may like, and you have access to my algorithm, so then you can then verify whether or not it fits your profile for risk. And so we just added a whole new dimension. We do that in the stocks, and we do that on the crypto side. And the win-loss rates are still very, very, very good in terms of being acceptable for us to share with people. So, we're talking north of 70% win rate on these. Now, look, I have a really large watch list, and we get 6 a day. So you can see the system is already screening these opportunities for you already, and it's presenting you 6 that are likely to make you profit. And then we do the same thing on the crypto side, on the alt side. And guys are making money like today on an Atom. We've had some trades actually in Bitcoin, even though the market was insane today. And then, so we do those things. And if you don't mind me doing a quick plug here, you can come check us out at tradelikeagenius.com. Dave alluded to the specials that we always run on his site. Those are good till Saturday, the 24th. In addition to that, we have bundle items that are 65% off. And if you buy our bundles that have ETF in it, that crypto bot, that ETF bot or the stock bot, that comes with the service now. I didn't charge extra for that. People who offer similar things as I do around bots charge 10 times what we charge. We don't need to. And so crypto, same thing. If you want to buy one of our crypto bundles, you'll get that bot access as well. And then if you join our VIP room, we have a bot that looks at buy and sell signals so that you can trade options during the day. And today, before the Fed meeting, we had 2 buy signals, and we caught them, made money. And then we had a big old sell signal where our probabilities told us to sell the announcement. Look what happened. The market cratered. And so we just had an awesome day today. And those are the kind of things that we do each and every day. So it's not Bob the Guru, it's Trade Genius, the system, and we give you access to them. Then you have chat rooms, we have training videos and the like. So we give a pretty all-encompassing way in which you could trade and learn. And we're not Lambo guys. We're not, you've been watching me now for probably, we and I together almost 9 years. I'm not one for hyperbolic projections. So we want to make sure that we're hitting base hits for you guys every day. And that's how you truly develop wealth. So tradelikeagenius.com on Saturday. Come join us. You'll like it. The price we charge is nothing compared to what you get out of it. And then you don't have to listen to me. I gave Dave just the last 4 or 5 days what people say about what we do. So, you're willing to throw those up there if you want, Dave. And I think people could judge for themselves how good we are.
Yeah, so let me ask you, with all those different data points and pinpoints that you have out there to connect through the wider landscape, for a better term, how do you actually consolidate that to see further out into the future, general trends, not specifics, but general trends? Like, a general trend that I saw over the last couple of days was big retailers are canceling billions of dollars of orders, specifically in electronics and household goods, because they see that's going to be a contraction phase in space. All right. So looking out, that's one example. So, with all the data that's at your fingertips, like in a general sense, how do you look out further into the world 3 months from now, 2 months, 6 months, a year? How does that all work together as one idea pack, for a better term?
We have a general sense for 12 months from now, right? So we know what the presidential election cycles tells us. We know what the euro dollar tells us. There's a euro dollar chart projecting out in 1 year that basically looks backwards and tells us whether or not we're going to be in a high or low, what do you call it? Animal spirits, if you will. And so that gives you the sense for it. We also know that the Fed, whatever the Fed's doing today, projects out a year in terms of pain or goodness. Right now, the pain trade is coming. So we understand these things. We also can look out into the future for oil and see how the out year futures contracts are looking. But that just gives you a general sense. Look, I think recession's baked in the cake, number one. Number two, we're at a point now where a lot of the bad news is now starting to come into focus. So we know probably somewhere between now and the 6 months from now, we'll see a low in the market. And then we know that the politicians are going to turn on the juice, try to lift the stock market again, try to get people out of their economic malaise. But we also now know that silver and gold and commodities are going to benefit from that because they ran out of ability to suppress it. So we look at those things, but mostly I just look out, 90 days, and that's good enough.
The bottom low that you're talking about, once we hit that point there, is it going to get bad enough in the market with the pain that they're going to switch over to central bank digital currencies and put some people on universal basic income? I mean, is that too outlandish to ask as a question? I know it fits in sort of the same road space there, but didn't know if you had any thought on that.
No, I don't think it's going to happen this political cycle because people are so fed up with government solutions to things that they're going to have to forget what they did to them in the pandemic, forget what they did to them with the woke school stuff, forget what they did to them on crime. That stuff has to get back in the rearview mirror a little bit more for them to recycle and rethink of new narratives to get people to do that. Look, I can make the argument for central bank digital currency. I'm not going to give them to those guys, but I can make the case for it tomorrow. If you had God, who is ultimately benevolent, running it, then it would be the most awesome thing in the world. But we don't have God. We have people that are at the other end of the faith spectrum, running these things, and they're going to use it for their own petty advantages. And so I think people understand that now. They don't want these people to have anywhere near that kind of control over their lives.
I thought I saw the Queen's burial procession being preceded and led by a goat. Just saying, on the other end of the spectrum there,
We got rid of the Queen a long time ago.
Yeah. But how, it's all this repeat again, when we look at cycles. So, if we're looking at this cycle in terms of the amount of contraction there is, the amount of restructuring, for a better term, what are we looking at? Are we really going back to the Great Depression in terms of that? Or is it a closer in cycle, maybe since the 40 years, since the 1970s? Or is it once in a century event? Or is it something even greater, back to the Roman Empire kind of thing we're going to experience? We got these different variables ABC here. So what do you really think it is?
Yeah, so I think it's Great Depression, but people need to be really careful. It's where you are and what you are is going to affect how you're going to fare. So the United States in the Great Depression was the world's largest creditor and the world's largest exporter, basically trade surplus. So they got absolutely clubbed like a baby seal in the Great Depression. Plus, they made other economic errors. They were raising rates into the problem, number one. Number two, his home ownership was on-demand notes, so that if a bank got in trouble, they can call your note, and if you can't pay the note off immediately, they can take your house. None of those things apply to the United States now at all. We're the world's largest debtor, we're the largest importer, and we're energy and food independent. And so we're going to be a lot more like United Kingdom was. And believe it or not, during the Great Depression, United Kingdom's real estate in London actually went up in value. So I think the United States is going to come through this relatively unscathed. But the countries that are the high mercantilist countries like, Germany and Japan and Korea and China and, there's some other ones, I'm sure, to a lesser extent. Some of the other European nations are going to really, really take it. Look, Germany may go back to the Stone Ages here. Look, all they have is they have high value export manufacturing and they have autos. Okay. They can't run either one of those things because of the high cost of energy. And so what are the Germans going to do? Right. They basically outsource their energy production. They're screwed. I mean, they're even relying on France. Okay. And so there's a problem there for Germany. And, Korea is going to be in the same boat. And what the United States is doing with the Five Eyes is we're going to be cutting China out of the basically the high value economic system. And China is, look, as you always point out, one famine away from total destruction. And they're getting problems. The United States is quietly behind the scenes supporting them, probably in hopes of getting China to influence Russia. But until we decouple from China completely, then China's in trouble. So that only benefits the United States. The only downside for us is inflation is going to go up, but the government really doesn't care about that because it puts everybody in higher tax brackets. Last month was the highest amount of percentage of income of the country went to taxes, even as high as it was during World War II when the tax burden was heavy. is that we're over at 20.2% of federal tax take, which is like we were 15% at the low just a couple of years ago. So we're at 20% already. And that's not even counting Biden's taxes kicking in yet. So, we have a spending problem. We don't really have a revenue problem in the United States. So a lot of those things are ultimately fixable. So United States, if you're listening from there, you're in good shape. If you're not in the United States, you probably need to figure a way to get here.
So you could take 1930s, like you say, the conditions in America, the situations, and then flip it and start to look at all the other countries where it is happening now, so we get a good idea of where those countries are going to be hurt most. So for me, all of a sudden, bing, gold and silver, because at that time we were on a gold standard until we're removed from that with gold confiscation. But, gold and silver, again, you mentioned it, you're not going to be able to control the paper market prices anymore. So knowing that, either physical in the hand or on paper, how do you trade gold and silver during these volatile times?
For me, I don't think gold and silver physical is at all practical. So, I view gold as, you hold it kind of for your fortress, right? But you're not going to run down to the grocery store for gold, right? You may not make it, may get robbed on the way. So you're going to look for the gold derivative like a Bitcoin that's going to probably be the transaction vehicle there. But, I personally like trading the stock ownership model. Homestake Mines was the number one stock coming out of the Great Depression, and that was a gold miner. And so, look, they're going to do really well. But I'm not saying we're going right now to 1929. We're going to go through the stagflation phase first, then we're going to go down to the 1920s. But bear in mind, too, I'll say this again and again and again, we're not going to be our grandfather's 1929. It's going to be a different animal. So it'll be painful, but it's going to be different than what they went through just because of resources here on shore. I just want everybody to understand that. So, yeah, so I just trade them. I just trade the gold miners, silver miners, uranium miners. They're easy. You just can click off profits all the time. And today they were all up. So they're sensing something else happening. And the COT report, as you follow stuff pretty closely. They flip bull. So these are the people that have been papering over these markets for a long time with sells. They've worked their way into a buy position on it, so they can torch these shorts anytime they want. And this is where you get the 25% moves in a couple months for gold and silver. Remember, gold and silver just doesn't cruise. Gold and silver likes to rip when it goes. And so we're at a point now where the bankers are no longer against you. The bankers are actually on the same side as you.
See, the whole thing for me is, I understand that the gold silver ratio is way tweaked comparatively with what it had been over historical norms. So buying silver now, to if it comes back to parity at 15 to 1 or 20 to 1, the amount of silver you have in your hand, you can then convert it over to gold and then get more gold holdings with the silver. The food pricing moving forward here, they came through and they were talking about having that rail strike right at the delivery dates of corn on the Chicago Mercantile Exchange. I still have some ears to the ground on what's going on there, and they're trying to facilitate the deliveries, and an enormous amount of people want to take that physical still, even though it's run past the delivery date, and because of the debacle. And see, that was the whole thing, that whole debacle where Amtrak was taking routes off, they were stopping deliveries and loading up trains right at those exact same dates. Seems a little strange for me when they were talking about an enormous amount of people not being able to facilitate all that physical corn on barges and rail. And then the same days they had their potential rail strike, which put everything off. So they were looking at another 7 to 14 days before they could untwist everything that got locked off during that pre-position period where they didn't want to get cargo or people stuck en route.
We're long wheat right now. We were long corn, that trade finished, but wheat's pushing through. And so some of that's Ukraine, some of it's, climate, and some of it's infrastructure. So, we see food prices going to be cycling through next year just because the whole supply chain costs too much. So that's how we view on the food side. And, you're kind of closer to that event than I am. All I look at is the charts, and wheat tells me to keep holding it because it's going to keep going higher. And so that's where I'm at on it. Soybeans, not so much. Corn, it popped and I was drifting back down again. Those are the really ones I could trade in the stock market. I'm not interested in doing those things. That grains and the futures market's too complicated for me. I don't have enough money to be able to suffer through the gaps they like to throw in these trades. So I just like to trade ETFs on those.
All right, Bob, that's great advice. I learned a lot talking to you today. I'll try to, formulate a few things moving forward, as well as dripping my information in on that. So appreciate your time, Bob Kudla, tradelikeagenius.com. And yeah, these next few days, because, the one you had talked about through the 15th of October, interesting, the Vatican says all funds need to be pulled back to the Vatican by the 30th, which fits right in that space there. It's going to be an interesting time by the time we talk next month there. Bob, any closing ideas for everybody listening?
Yeah, I mean, own things that people have to have, sell things that people don't need, and you're going to be mostly on the right side of the trade. And it's going to be wild for the next until we get through the next election cycle in 2024. So be prepared for it. Don't fret. We're gonna come out of this thing okay.
Opportunity in the danger. Wei Ji, speaking of the Chinese collapse going on. Thanks for your time. Hope you got something out of our conversation, and we'll see you next month. Bye for now.